Hello and welcome to this Mutual Fund Corner special. I'm Pavitra Parekh and today we're going to talk all about multi-asset and multi-cap funds. How do you really figure out if these are a good pick for you, and are these a good way to really get exposure to the hot mid and small cap space that we've all been talking about? Is it a good way to diversify your portfolio? To discuss all of that, I am joined by Santosh Joseph, who's founder of Germinate Investor Services. Santosh, as always, thank you very much for joining us and taking out the time for this special today. And my first question is on exactly that. Take us through the benefit of this category of funds amid, the entire basket that is available, and who do you think these are well suited to?
Hi, Pavitra. Great to be back. And it's a great time to be doing this session both on multi-asset and multi-cap. And I think investors are now maybe even thinking, what is this multi-asset and multi-cap? At first, I think we should sort of differentiate the two. Now, for long, we always said that it's a good thing for investors to be in a diversified equity fund where there's no sectoral bias or a cap bias. Multi-cap actually is the perfect answer to that because the definition of multi-cap is that you've got to have a minimum certain percentage, which is 25% in mid, large, and small cap. And the rest is left to the discretion of the fund manager and the stance of the portfolio based on the scheme objective. Now, when you look at this construct, it gives the investor and the fund manager the ability to be through the diverse market caps through the investment cycle. Now, this gives investors the benefit of not saying that I missed out a mid cap or a small cap rally or I missed out on the large cap stability that you get. Now, compare this with multi asset funds. In multi asset, it's just more than one asset. There again, it's a great boon for investors because you got Indian equity, Indian fixed income at some level, gold, silver, and maybe even international asset classes. So these are very good, diversified, broad themes for an investor to benefit from because you've got so much packaged in just one or two objectives.
Okay, that really helps, and that makes a lot of sense. But Santosh, I'll come to the multi-cap in a bit, but just on the multi-asset funds, since these offer so much diversification, we do talk about how it's important to have some gold in your portfolio. It's important to have exposure to debt. Do you think this is a better way to get exposure to all of these various asset classes rather than looking at individual teams, which can be intimidating for someone who's not used to this entire investing space?
Absolutely. I think you just said that so well in your question. Is that most investors, especially retail investors, have a tendency to chase returns. Now, this makes them ignore the one asset class that's not performed. In a multi-asset class, there are multi benefits. Number one, you don't have to chase returns. At some level, you're going to have some exposure to three, four assets throughout the cycle. The second thing is that when you have more than one or two assets in one fund or in one portfolio, the risk goes down substantially. Now, the third benefit is that you don't have to worry about rebalancing because that is done at the level of the fund. Now, in many times, you're worried whether I should enter gold or exit gold because you do not know whether the valuations are good, valuations justify. And even if you were to get yourself around the valuations, what percentage do you hold? That's where multi assets are giving retail investors and including savvy investors an opportunity to be in multiple asset classes in one fund and also have a method for it going for you so that next time when you see one asset running off, you don't feel left out, but you capture that.
Okay, I think that really answers it, and especially for a lot of young viewers that watch us, this could really help them out. Santosh, coming to the multi-cap funds now, we've all been talking about this huge rush of money into mid and small cap stocks. We got the mutual fund data, and money is flowing out of large caps and into these categories. Do you think with the multi-cap fund, that is a better way to get exposure to the broader market because you're still kind of balancing out your investments, right, with some amount of exposure to the larger names?
Well, let me just go back and tell you why this is possibly happening. Is that, see, the large cap universe is restricted to only 100 stocks. Now, whichever large cap fund you're going to be in, you'll see so much commonality, so much of overlap and overweight on large caps. If you go to the mid cap category, again, it's by definition limited to 150 stocks. Now, when you go to small cap, the universe just widens to a few hundred opportunities. Now, what is it telling you is that there is true diversification and there is true benefit of stock picking and a selective benefit for the active fund managers to really select a particular stock, go overweight, underweight, whatever you want to do in that category. Therefore, the recent few months when you saw the mid cap and small cap take off after almost a year and a half lull that we saw in the broader market in general, people are saying, hey, why do I have to be in large cap or mid cap? I'll just move into mid and small cap or small cap themselves. Now, in a multi cap, you're solving that problem. You're not putting the investor in a quandary to say, hey, is it the season to be in small and mid cap, or is it the season to be in mid cap alone or large cap? Because by definition, like I explained earlier, you've got to have a minimum exposure to large cap, mid cap, and small cap. And depending on the stance of the fund or the outlook that the fund manager's got on the economy and on the stocks that he's buying, he can go overboard a little bit on mid cap, small cap, or large cap. And therefore, for an investor, you don't have to worry about timing the market. You don't have to worry about valuation biases or recency bias. Clearly, what we're seeing right now is a recency bias. Mid caps are doing well, exit large cap and move into mid cap. And on the contrary, we've even seen the other way that people selling off small and mid cap and moving into large cap to protect capital. It happens both ways. So, multi cap is a kind of an answer for that problem.
Yeah, that makes a lot of sense. And also, this is perhaps a job which is best left to the experts, right? Rather than you going and trying to pick what part of the market you should invest in, it's better to leave that to an expert, especially if you're someone who's not so well versed. Santosh, but mid-cap funds, multi-cap funds, multi-asset funds, these are offered by all fund houses, right? How do you really pick amongst the lot? Is there a basic sort of cleanliness study that you would do based on perhaps the AMC, the fund manager, the size of the fund? How do you pick amongst the lot? And do you think there's a minimum sort of investment period you would recommend for this category of funds? I'm talking about the multi-asset and multi-cap.
Well, to begin with, let's answer the multi-asset category. Now, the multi-asset category, because it's got multiple assets and you're giving the fund manager the discretion to choose between assets, the weightages, and when to exit and when to rebalance, I would think that this is actually a slightly longish term product. And the true benefit of it happens over one or two business cycles where you don't have to flip the investment that you got to wait and let the assets in the portfolio play out. So ideally, I would think an investor comes in here because he doesn't want to, worry about when to enter, exit a particular asset. Therefore, when you get in, our ideal time frame is 3 to 5 years because only then you will see the benefit of the assets playing out. Number one. Number two, for multi-cap, the similar strategy should be followed, but this is for people who would otherwise worry about moving into large cap and mid cap and figuring out what is favorable. There you remove the favoritism out and you say, listen, I want a diversified play. We know that irrespective of how the markets are, there are specific ideas that are doing well across the broad market caps, and I will be present. So I'll begin by saying that multi-assets can be literally for many investors a fill it, shut it, forget it, and you can stay in for a longer period of time. Multi-cap could still be seen for a 3-year perspective. Now, coming to choosing these funds, I think we all know that the simple thumb rules are the asset management company and the pedigree of the fund managers that they got. Sometimes we tend to have these biases saying that a particular fund house is good for mid cap, or particular house is good for small cap, and some of us tend to have these notions. But I think what is best is to understand, number one, that the size of the fund. If the fund is doing well, it's bound to have good flows. Now, if the flows are good, it is a measure of one, the scheme objective being met, two, the performance also being delivered. Number three, if performance can be sustained over long periods of time, let's say 5 and 10 year period, then you have something working for you, that they know how to get the multi-asset strategy right, or even the multi-cap strategy right. And I think today, thanks to the plenty of amount of information available, the pedigree of the fund manager even before you go to invest, because the data is so easily available. So pedigree of the fund manager, sticking to the scheme objective, and at some level, I'd even see the flows of the fund as a kind of a good measure to say whether the fund is good and it's doing well.
Okay, I'm sure that really breaks it down and helps anyone who's trying to look at any of these categories to get in. Santosh, one final question. What is the tax situation like on these? Because, that is a big factor that investors do consider as well when looking at any category. So what is the tax treatment of these funds?
So the tax treatment in multi-assets and different asset management companies have taken different stands on it. The first simple rule is that if Indian domestic equity is less than 65%, you get debt taxation, which is today business income tax. Now, there are some asset managers who ensured that a minimum of 65% is held in Indian domestic equity. The balance, less than 35%, is managed with the different multi-assets. It could be gold, it could be multi-asset, it could be fixed income, or with any other option of assets that they may have access to. Therefore, there are some say that we will be able to earn superior risk reward outcomes, but the taxation is not going to be equity. Some will say we will aim for equity taxation, but then you are going to take in 65% Indian equity and a smaller chunk in non-equity assets. So therefore, the clear demarcation is whether the multi-asset fund that you're investing in has got that 65% Indian domestic equity exposure rule being followed. If not, it's business income tax.
Okay, got that. Santosh, with that, we're going to wind up, but thank you very much for taking us through this complete class on how to look at multi-cap and multi-asset funds. This is a space that has, seen big interest, and a lot of our queries also that come in are on these categories. So thank you for taking out the time and explaining that all to us. With that, we're going to wind down on this Mutual Fund Corner special. I hope that helps you, and we'll be back very soon with lots more.